All right, so I know a lot of you, but there are also some new folks on the call. For those of you I don't know, I'm Lindsay Gleason. I'm the Assistant Director here at the Community Foundation of the New River Valley. And we're excited to be together with all of you each month on the third Thursday of every month. Sometimes we change it up, but we aim for the third Thursday of every month. We hold a workshop aimed at topics that are relevant for nonprofit leaders, but anyone can join these calls. You don't necessarily have to be an executive director to be on the call. Everyone is welcome. You don't even have to be part of a nonprofit. If you just want to come and learn because you're interested in the subject, everyone is welcome. So we're just glad to be with all of you today. I'm going to open up my PowerPoint and share my slides. All right. All right, folks can see that I have my PowerPoint open. Excellent. All right. So today's third Thursday is with David Riggan, who's the Community Foundation of the New River Valley's board treasurer, and we feel extremely lucky to work with David. Not only is he a wonderful human being, but he really knows his stuff when it comes to finances. So we never want him to leave, and we just want a lifetime contract with him on our board position as treasurer. David, as probably some of you know him, he lives in Pembroke out in Giles, and he spent a lot of his career in finances. He's a CPA and he has a BS in accounting. He spent the last 17 years of his career as a CFO, and so he knows his stuff, and we're so excited to learn from him today. And we know that, just mute yours, and we know that but this is a perennial topic for folks in terms of needing help with finances. So we're just excited to learn from him today. So a few announcements before we get started. What's coming up? So it's a busy time of year at the Community Foundation. Our annual Giving Day is next week. And I know a lot of people on the call are participating this year. So for those of you who aren't familiar with the Give Local NRV Giving Day, I strongly encourage you to go to givelocalnrv.org and check it out and make a gift of $5 or more to support your favorite community organization. This year, we have 130 organizations who registered to participate, including the Community Foundation and a ton of other folks on this call. And so how it works is community organizations, mostly on nonprofits, but sometimes units of government like libraries or animal shelters register with us for free to use the platform. And then we all work together to fundraise and raise awareness for our missions. And one of the cool parts about a Giving Day is there's all kinds of incentives to participate. We have different grants and prizes that we're giving out for reaching different milestones, most number of donors in a certain category or time period, most money raised in a certain category or time period, that sort of thing. So it's that extra incentive for folks who are participating in the event. So, and we're giving out $20,000 this year to our participating organizations. So we're just excited about the event, and we really encourage you to go to the website and check it out. We're in the early giving period, so you can make a gift now, or you can wait until the Giving Day kicks off at noon next week on Wednesday, the 26th, and it will end at noon the next day. So we're really excited about that. And then next month, we will have third Thursday on July 18th from 9 to 10 a.m. That will also be a virtual meeting. And it's all going to be presented by Lisa Garcia, who worked for the Community Foundation back in the day and is a longtime partner of ours. She also works for the NRV Time Bank right now. And she's going to be talking about designing with Canva, which is a free program that you can use that makes designing materials, whether online or print, really easy. You don't have to be a graphic designer to be successful with it, and it's a really fun program. So we'll be digging into that, and we hope that you join us. Anything that we offer virtually is recorded, including today. At least I hope it's recording right now. Let me just check that. Always good to check. It is perfect. And so we are able to process the recording in about a week, and we can send out the link to you all along with today's slides. And it's also posted on our website. So I will follow up with links and information and the slides after we get that recording processed and send that information to all of you. So just know if you have to leave a little bit early, you'll still be able to get the content should you wish to go back to the recording. So with today's sessions, we always turn on the auto generated captions at the bottom. You can always turn them off on the bottom of the screen. Just kind of go to the little toolbar at the bottom of the Zoom if you want to hide those. They'll just hide them for you, not for everybody. We turn these on because they help folks who are deaf or hard of hearing, but also people if you're who are in loud environments or those who can't have their sound on for whatever reason. It just helps. So we can get into the presentation. As I said, we know that financial planning and budgeting are perennial topics for folks, and they are essential topics to learn about when you're involved in running a nonprofit or if you want to submit a grant. So we're just really pleased to have David with us today. And if you have any questions, David will pause at different periods to ask if you have questions, but feel free to unmute and ask the questions. We'd prefer that over putting them in the chat. Not the end of the world if you put it in the chat, but if you unmute, that would just be easier for us to see. And of course, there will be time at the end for questions. So with that said, I'm gonna turn it over to David and I'll let him take the reins.
All right, good morning. Thanks everybody for being here. It's great to see you. I'm pretty excited about Give Local too coming up next week. I'm on other nonprofit boards and we use the Give Local platform as well. And we're pretty excited about what we're going to do next week. Let's go on to that. Let's jump into the topic. So why do we budget? Let's just start with why. And the first reason why is because you have accountability. You have accountability to your boards, certainly grantors, contributors, and other clients and constituents. You know, when I was in the business world, there was a movement at one time to say budgeting was a non-value added activity. It's a lot of time spent and it doesn't change anything. That happens, you know, every week, every month. But the truth is that philosophy didn't last very long. And companies who tried that immediately went back to budgeting for the reasons that you'll see here on the slides. And you have a fiduciary responsibility for funds that are provided to you to hold for other folks to spend as they were designated. You certainly have financial reporting, and that's usually, of course, monthly, but quarterly, annually as well. And you need to track those revenues and expenses, but you got to track them against something to know whether you're on track or off track. You also need to track your cash positions, know how you're doing so that you make sure you're viable and you understand that you're going to have the funds to do what you need to do in the future. You often want to track those by individual fund or project, and we'll talk about that a little bit later. And it's good usually not just to track against the budget, but against maybe a prior period, so you can understand how you're tracking versus your history, not just versus what you set up as a budget. So reporting versus your expectations is the budget. And the budget really represents your expectations, and keep that in mind as we go through. Lindsay, you want to go to the next slide?
There we go.
There it is. She got it. Well, you know, with large companies, you know, we're in nonprofits here and typically some smaller organizations, but even in large companies, budgets are there and they're very extensive. It's a long process, often takes 3 months of the year going through a budget for a large company. And why do they do that? Well, they do it to set expectations because they've got investors and stockholders and board members who expect them to have good financial management. And the process always starts with that budget. In the private sector, you know, financial markets drive stock prices, and that's really what companies are gauged by, is how well their stock is doing. Well, what do you guide that against? Well, it's called guidance or future performance expectations. And where does that come from? Of course, that comes from the budget. So those future expectations and guidance, if you watch any business news shows, you might see frequently that a company, it reports earnings and they might be good or bad, but the good or bad is compared to expectations. And if they miss expectations, they often get penalized in the stock market. If they don't, and they overperform, they usually do better. Or if they change their guidance, again, they change their budget or their outlook, that can change the way they're viewed in the marketplace. And the reason I'm talking about that is because it's important for nonprofits as well to understand that expectations do matter, just as it does in the private sector. It also gives you an internal benchmark when you budget, just to track your own expectations, not just the expectations of others. Go to the next slide, Lindsay. So in the Y budget category, you know, organizations and individuals supply you funds, and all of the nonprofit boards and organizations that I'm associated with, they are oftentimes grantors who expect tracking against the grant that you might have received. Private organizations who give you money, individual donors, or even government organizations. There certainly is a lot of paperwork typically if you get funds from government entities, and you're going to be tracking against a budget. Board members also, anybody that you have on your board, large or small, it has a fiduciary responsibility to take care of the funds that you're entrusted with. And those board members actually can have liability if something goes wrong in the nonprofit in your organization. And that's why there's such a thing as directors and officers liability insurance, because they have not just a fiduciary responsibility, but they have a legal obligation and responsibility as well. So tracking against the budget helps your board members to understand whether you're headed in the direction that you believed you would as you entered into the year. Now clients who you serve, you know, why is it important to your clients and the people that you work with? Well, you have to be financially viable, of course, to be able to provide those services. So sustainability and fiscal responsibility, again, which includes the budget, is very important as you move forward. Let me go ahead and go to the next slide, Lindsay, but let me pause. We just went through, you know, why you need to budget and why it's important. Are there any questions there? Anything that I didn't cover that you'd like for me to articulate? Okay, well, let's talk a little bit about how do we prepare a budget? Well, the formats vary, but usually it's going to be all the income sources you have, where your money comes from, and all your expenses, where your money goes, and what you have to spend. So it's usually on a cash basis for most of us in the nonprofit world. The accrual basis, which is what the accounting world does in large companies and a little bit more sophisticated, is very complicated. So it's much simpler to keep things on a cash basis, which is simply when you receive the money or when you disperse the money. That's a cash basis. It helps you to understand your cash position, as we said earlier as well. You back one?
Yeah.
Lindsay's moving fast on me here. She wants me to get done. But documentation and notes to you. How did you get to the numbers that you calculated in your budget for your revenues, expenses? Very important. So keeping notes, it's easy to sit down in a spreadsheet or on a piece of paper and put numbers down and do a budget. But as you go along, it's much more helpful if you document how you got to those numbers instead of having to go back later and explain to somebody who's reviewing your budget how you got to those numbers in the first place. Okay. So the formats, you know, when you talk about documentation, what are your assumptions? Well, you have to document what you assumed and how you calculated what you did. For example, in a revenue category, we'll go through an example later on, but what assumptions did you make about how many grants you were going to receive, and in what amounts were those grants? How did you calculate what you were going to have in the way of sales if you happen to be in an organization like the example we'll go through later, which is a thrift store that has some retail sales? How did you calculate and estimate in the budget what those sales would be? So the reasoning for those timing and amounts, of course, is important, but it also allows anybody who's looking at your budget, even if you make a grant application to the community foundation, the reviewers are going to look at the logic and how you got to your numbers and compare what you did that maybe to what you supplied
in the past or what your prior budget or actual was. So the impact on cash balances, obviously, when you're doing a budget and you've got your revenues and your expenses on a cash basis, the differential either increases or decreases your cash balance. So if you have more revenue than expense, it's going to increase your cash balance. You have more expense than revenue, that's going to drain or decrease your cash balance. So in terms of format, just documenting how you got there, is the most important first thing to think about. You're good in the next slide. So what are the methods? There are many methods in budgeting that have been documented in financial circles over the years. The first is zero-based budgeting. And that is what it sounds like. You just start from scratch. So you list anything you can think of that might be income that might come into your organization, anything you can think of that you've got to spend money on, and just start to make a list. And then as you think about those, you start to think about, well, what am I going to assume that I'm going to have in income? There may be some things that there may be some things that you're guessing at, but how did I get to my guesses if it's an estimate? You calculate the amounts of the revenue and the expense item, and you usually do that by month, so that you can add up the months and arrive at a full fiscal year budget. Now, why do you do that? You do that because a lot of organizations have ups and downs and cycles throughout the year of when they might receive the revenue and when they might have to spend the funds. For an individual project, for example, like the ARPA project we have here with early childhood education, that can vary greatly by month. And we started from scratch in a zero-based budgeting because that was a specific individual activity. So you forecast the cash and what you've got available. That's important because you need to understand, do I really have the money to do what I'm planning on doing here? And what am I running close? Do I have a surplus? Do I run the risk of having a deficit? So those are the things you've got to think about. And zero-based budgeting, as with the other methods, can help that. Next one, Lindsay. So the next one I call it history-based budgeting, which is what it sounds like. You just use your prior year's information, the revenue, expenses, but that's just a starting point. You got to think a lot about what's going to change during the course of the year. So you determine what will be different. You think about that on a month-by-month basis, and then you adjust what you had last year up or down based upon what you think is going to happen this year. Again, documenting those assumptions all along the way to make sure you know how you got there. And let's do this. We'll talk about it. Next slide, Lindsay, and then we'll ask for questions here after the budgeting methods discussion. So activity or project-based budgeting, pretty much the same thing, but you're doing it for a specific activity, fund, or project. A lot of nonprofits have multiple funds that they take care of. So you might have to budget by individual fund. You might have a specific project that you're receiving a grant for, but you need to track that and be accountable against a budget. You might consider that there's needed funding and income to support a specific activity that maybe your organization hasn't done in the past, but you really want to do that. You see the need in the community, but it's something you haven't done. So you got to think through that whole project, maybe go back to the zero-based method, but use that with a specific activity or project. So these can be blended. There's not a one right way to do the budget, but I think all these methods can help you as you think about where you need to go. And again, you need to document how you got to the numbers. What are your assumptions? Let me pause there and see if anybody's got any questions on budgeting methods, how they apply to you, when they apply. Be happy to take any questions. And as Lindsay said, you could use the chat too if you don't want to speak up, but and then we'll just get back to the questions in the chat later on.
David, while people are thinking of questions, I have maybe a question that's semantics in terms of how people refer to budgets. So we'll talk about an operating budget at the community foundation. Is there a difference that you can think of an operating budget versus an organizational budget? Is that just saying the same thing?
Yeah, it pretty much is. I mean, an operating budget is typically the budget that you need to fund everything that you do as an organization. Now, there are different kinds of budgets that I didn't try to cover here, like capital budgets. So if you've got a major project that includes fixing a building or something like that, buying some major equipment, then that might be a separate budget called a capital budget, which is funds for assets that are going to last a long, long time, not just for that specific year. But otherwise, the operating budget is pretty much what you're going to do.
Is there kind of a norm or best practice for budgeting for unplanned budget expenses?
Yes, I should have covered that. That's a good question. Contingency, of course, is the word you typically hear for that. And depending on the organization, some people will use a percentage of their total budget as a contingency if you have very significantly variable types of activities or expenses that can hit you. So a 10% contingency on a budget is a pretty typical thing to try to have. Some 5%, you'll rarely see anything over 10% because that's just a lot on the total budget. But 5 to 10% as a contingency, and depending upon how your activities flow, you could do that in a lump sum, or you could just split it evenly throughout the year. But that's a good question. Contingency is not a bad thing to have, especially if you don't have a huge amount of history to know what's likely to happen, or if you have a lot of different projects you're starting up year to year that can have a lot of variability from what you've historically done.
So would you include that contingency as essentially like an expense, not just leave it in the net revenue to then be like potentially consumed?
Correct. Yeah,
Okay.
I'd put it in the expense line so it's identifiable. So when somebody reviews the budget, they can see, well, here's the contingency we built in. And again, in your assumptions, you can document, why did I build in that contingency? That way you keep your revenue line pure.
I had a question kind of relating to that. It had to do with likelihood of funding. The organization I work with has not been applying to foundations for grants until recently because they've been self-funding through program income, which has been an unusual experience for me. To have to work with a nonprofit that is really largely self-funding, but we're really trying to expand programs now. Particularly mental health services. So my question about likelihood of funding is that on the budget, you actually see that we have excess income projected every year, which has allowed us to grow for the first 10 years or so. That's sort of, in other words, I suppose in some ways that's a little like a built-in contingency fund. But if foundations see this, that we're actually managing to support ourselves as well as have extra, which everything goes back into expanding the programming into direct services. Do you think that's more likely or less likely to be funded overall?
I think it's neutral. I really don't think most grantors are going to see that you have been able to be successful and build some funds and maybe some cash reserves and see that as a negative. I think they see that as a positive for financial stability. And I know here at the Community Foundation, we certainly wouldn't look at that as a negative. We look at it as a positive. And we're going to actually talk about that here in the slides in just a minute. That's a great question. So let's talk about the individual components of the budget. Revenue, we've talked about this some already, but the donations certainly, they could be individual or corporate donations, sponsorships, grants. There are some organizations that have revenue from sales. We mentioned the thrift store earlier, and we'll go through an example that has that, and certainly government funding. So identifying the specific source, who's it coming from, and how did you get to the amount? Is that the amount you applied for in a grant? Is it based on last year's donations history? Is it government funding that you can count on that occurred year after year? Those are the kinds of things to consider. You might have a committed grant, as it says in the second bullet there. Maybe it's October. You submitted a grant back earlier in the year, and you're doing your budget for the following year. you got the grant approval, so you know exactly what that amount's going to be and when you're likely to get it in the following years when you're doing the budget. So those are things to think about relative to the revenue sources. And you might want to go out too, and obviously you've got a pulse on your organization. Do you have a feel for donations and who's going to donate? Can you talk to some of those donors and ask if they will continue to do the same thing next year that they did in the prior year? So those are things, same with grantors, of course, talking to them about what you might do, not just doing an application online, but maybe have some conversations as well to be able to gauge whether your revenue will be where you hope it will be. And on the expense side of the equation, payroll and
Can I ask a
benefits.
quick question before you
Yes,
move
yes,
away
please.
from revenue?
Yeah.
So when thinking about revenue, especially for smaller nonprofits, when we are receiving, I think at least a handful of us, or we do at least, to have kind of some set expectations as far as revenue. We know some of the things that'll come in. We have some corporate sponsorships and things like that. But for instance, this year we received a 3-year $100,000 grant. Would you put that into the next 3-year, but like whole budget, or for something that's a limited amount of time, or even a singular grant? Do you put that in as big picture revenue, or would you recommend kind of keeping that? So like right now I keep that as almost like a separate budget. Like I have a budget just for that grant that I run separate of our operating budget.
Katie, are you saying it is operating funds, or is it a separate project?
A portion of it is operating funds, so it has like personnel costs in it. It's got materials costs, so it's got built in a variety of some things are very programmatic specific, but there are things like we can purchase laptops. Well, they're not just going to be used for that particular grant. They're going to be used across the board. So personnel costs is going towards a teacher that's going to do more than just that program. So it's being built into that teacher's total salary. A portion of it comes out of this grant.
Yeah, we have some of the same situations at the community foundation, and certainly if a portion of that grant or even a restricted donation can't go to support your operating administrative expenses, then I'd put that in that category for that year. I would do it each year for the next 3 years, but just the amount on an annual budget, of course, that's going to be in that year. And if you have a separate project-based budget for something that activity is going to go to that's outside of your normal operating budget, then I would split it up into those components, your operating budget or a separate activity or project. Did that answer the question? Is that what you're asking?
So I'm hearing I potentially may do both with this particular grant or grants like this. So put what goes into our operating budget, go ahead and put that in our big operating budget, but I may also then keep a separate project budget for the items that are specific and dedicated to that particular project.
Correct. The way to think about it is how do I want to track this, and how do people that are interested want to see it? So if that grantor wants to see a separate accounting for the activity in the project, but they know that some of the grant can go to administrative expenses, you can demonstrate that to them in both places so they can see how you did that, and then track against it, of course, on an actual basis. Yeah, that's an excellent question, and it does come up a good bit. Okay, we'll head to expenses, and payroll and benefits are certainly one expense category that most everybody has. Hopefully you guys are employed and getting a paycheck, and it's not all volunteers. So you always have a salaried person. So obviously you know what that is every month during the course of the year. But you might have estimated hours for part-time or other full-time employees as well. And so you just need to calculate the number of hours you believe they'll work times that hourly pay rate to try to come up with the monthly amount per employee. And then, of course, I would keep a separate or a side spreadsheet or tab that kind of listed those employees when they come and go. You may have seasonality to when you bring people in, or maybe project-based on the number of employees that you have at any given time. So probably a separate tab on a spreadsheet just to be able to show where those calculations are coming from in terms of hours and wages. That might also be by name if you know who those employees are, if you're just trying to estimate somebody that you think you're going to hire, but you don't know their names, just put down employee and put down the hours and the wage rate and try to calculate the wages. I know that's simple, but it's important to do, to try to understand what your expenses might be. And then, of course, you'll have some cost attached to any employee that you have, including the Social Security taxes you have to remit to the federal government. You might have health insurance. You might have workers' compensation insurance premiums. You might have state unemployment that has to be filed with those. So estimating those costs, unemployment's less of an issue because it's on a lower base and it's not something that everybody has to worry a whole lot about, but it's based on size of organization. But there are costs. You'll have to think about all the costs that surround having anybody on the payroll. And seasonal timing, we mentioned earlier, but that's important. You may not need somebody all year. So trying to understand when you need those folks and how many hours you need from them is really important. Let me pause there, but obviously we're going to go through other expense categories, but payroll is usually a very critical one. Are there any questions on the whole payroll budgeting side of the equation? Okay, let's move on to other things. And I put this in not because it's something you need to write down and budget from a financial and a dollar standpoint, but oftentimes when you go to apply for grants or you're just talking to a potential donor, knowing that you have volunteer hours is important. In other words, you are conducting a lot of your nonprofit organization activities through volunteers. In the example we're going to go through later, for example, there's a food pantry, and all of the people who work in the food pantry are volunteers. So if we go apply for a grant from that organization and say, we don't spend any money on payroll to support that food pantry, everything we do is volunteer. But you can also show, well, how many hours were they there? What was your coverage? 8 hours a day, 10 hours a day, 6 hours a day in that food pantry. It's important to be able to show that. My wife and I worked extensively with 2 Our House program for over the years. And that's a program to help homeless folks. And one thing they do is they track the volunteer hours there. Why? Because they only have a few employees, but all the others are volunteer hours from organizations, churches, and places that house the homeless folks. And so when they go to apply for grants, they know that the overwhelming number of hours spent to support their mission is done by volunteers. Well, why does that help? Well, a lot of people giving grants or donations want to know that everything's being done as efficiently as possible and that their dollars can have the most individual impact possible. And if you've got a lot of volunteers putting hours into your organization, then that means the overhead is much lower for your organization than it would have been if those people had to be paid. So lower overhead equals a good perception by donors to grantors typically. So that's the second bullet there. And they have the last bullet there is true. Those volunteer hours have a real monetary value. So good thing to track if you're not and outside your budget, or and if you do a budget presentation to your board or other constituents, you might just show that kind of activity internally too, not just to external groups. Okay. Well, other than payroll, we usually divide the expenses and large businesses do the same thing into fixed and variable cost. Fixed are kind of non-discretionary. It's what you've got that you've got to spend every month, regardless of what happens with your activities. So they don't vary a lot from month to month. Typically, they could be rent, they could be a mortgage, they could be equipment rent. Yeah, you can see insurance and things like property taxes, if you've got a facility, internet, phone, communications expenses, most of us have those, or routine supplies that come through. It could be your copier, it could be other types of supplies that you have in an office or even at home if you work at home. So those are expenses that should be fairly easy to estimate month to month, but very important too, because that's effectively some of the overhead that you start with that you know you need to cover with the revenue, whether it's donations or grants or other activities to bring in to cover those overhead costs. And variable expenses, it's kind of what it says. They vary from month to month. Typically, it could be a program or a project expense. And of course, that's usually related to whatever your mission is as a nonprofit. It could be utilities and maintenance. It could be fees you pay to accountants or somebody to keep the books or legal fees, hopefully not, but some people do have that, an audit. And it's really dependent upon what you're trying to do with your organization. This is the mission related stuff. We call it oftentimes program expenses here at the Community Foundation. So it's what we exist to do, but those expenses sometimes can be a little harder to project how they work during the year. So you've got to think about what's happening in your organization and when it's going to happen to come up with those. Let me pause there for a second. See if there are any other questions on expense budgeting. Okay,
Could I ask a question, please?
sure.
So I have a very small nonprofit and we're very new. We only got our IRS determination at the end of December. So we don't have
Oh.
history. We
Yep.
have no history. We hardly have a present. And it's an all volunteer organization. So over the last few months, basically, we have all absorbed little expenses, by which I mean, a case of paper here,
Right.
a tablecloth there, a few odds and ends. Do we have to figure out what that is? Or
I wouldn't say that you have to at this stage of your development, but as you move along, starting to document those so you understand what you're actually spending. Because at some point, if things work out the way you probably hope they will, it's going to grow. And
Right.
as it grows, you'd like to be able to know what you're spending and tracking, because you may end up asking somebody else for money to help support your mission. And
Right, okay.
being able to show them what your history has been is important. So you're not so much in the budgeting stage as let's start to track a little bit of what we're really doing right now. And then maybe next year you worry about a budget a little bit more.
Oh, thank you. That makes me feel good because in the fall, I can imagine us saying, "Okay, let's sweep out all the corners, figure everything that was donated to make this activity work, and then we could generate a subsequent year budget." But for
Yeah.
this year, we're just doing.
I don't think it's critical for you for this year. As you get larger, and if you get large enough, there is a federal tax form called a 990, which is a form that a
Yeah.
nonprofit organization needs to file with the IRS. And you have to have some tracking in order to do that. But at your size and stage, it's probably not even going to be an issue this year.
Okay, great. Thank you.
You're welcome. Good question. Any other questions? Okay. Well, does your budget need to balance? That's something that I've heard that question before. And do your revenues need to equal expenses? After all, you're a nonprofit, so shouldn't they equal? And my answer to that is no. And if you go look and Google it and you go look on the web, you'll see various answers. But I think no is the right answer, because your board and the other folks that you're trying to serve may want to see a balanced budget. You may have grantors who want to see a balanced budget, but in the end, if you budget for a surplus, and that was mentioned earlier, that's okay. If your revenue exceeds your expenses on a cash basis, so you can help to build some cash reserves, which allows you to make sure that you're viable and sustainable for the long term. That's a good thing. That's not a bad thing. Now, if you do that forever and all you ever do is keep building up more and more cash and you're sitting on $1 million and not spending it on your mission or purpose, that's a little different. But if you're going along and just building some reserves in order to make sure you've got the funds to operate in the future, in the example we're going to go through at the end, for example, we have a facility. Well, it's an old facility. It's paid for, thank goodness. But what happens is you can have huge expenses hit you at any point in time for repairs or maintenance. We had some asbestos removal, which is extremely expensive in that facility. So having some cash reserves in order to be able to stay viable and do things that have to be done with your mission or outside your mission, just to maintain a facility, for example, or keep equipment going. And in a food pantry, you've got refrigeration, so having your refrigeration continue to work, having a budget in case it breaks down. Those things are very important. So it's okay to budget for a surplus if you're in the enviable position that you can get there. So, and then the other reason you do that is you may not have developed all your programs yet that you'd like to, but you may have some ideas about larger programs that you might want to spend money on in the future. So if you build some resources and reserves to fund those future projects, that's okay too. Just building reserves to do nothing but sit on cash is probably not something you want to do, but building reserves to do something that fits your mission later on is certainly there. And we just talked a little bit about unknown contingencies, and somebody even talked earlier about contingencies built into a budget. And that's one reason, if you have a surplus budget because you happen to have a structure where your revenues will likely exceed your expenses for a year, hey, that's okay. Again, as long as you're meeting the requirements of grantors or others who have specific projects that you have to report against. Any questions there? Let me go to the next one and then we'll ask for questions. Because the second one is, can you budget for a deficit? And my answer to that is, yeah, that's okay too, but it's probably only okay if your expenses exceed your revenue on a cash basis, if you know you've got some cash reserves on hand that can fund that. So if you've built up some cash reserves, you've got a major project that you think really fits your mission that you want to do, and you're going to run a year where your expenses exceed your revenue and drain down some cash, that's okay. You're meeting your mission, but you know you have enough cash reserves on hand to stay in good shape and be financially viable. So as I said in the last bullet there, that's a temporary pause in a revenue source, might happen too. You might have a grant that you got this year, but you lost that grant for next year, but you've got cash reserves, that's okay. You're going to keep spending at the same level you did last year, even though you don't have the revenue you had last year. You might not be able to do that forever, but if you've got good cash reserves and you feel comfortable doing that and your board does, then hey, that's okay. Okay, let me pause there then and see if there are any questions.
I have a question. So
Okay.
for our organization in particular, one of the requirements of our building contract is that we have to make a significant amount of improvement on the building. So in the millions of dollars range over the course of a certain period of time. So for us, there are absolutely years that we will operate not with the balance budget, that we will spend down some of our reserves for that purpose, because we're talking like our next particular project is over $100,000 to get through more square footage of our building. So the year that we tackle that project in particular, like we will absolutely be eating through a portion of our savings. How do we, or do you have any advice on kind of helping to portray that message when it comes to talking to donors? So, we have been, we've built up money, but we've built up money with the purpose of we have to do this next phase of work on our building. So we will, like I said, absolutely have a year at some point in the near future where we're going to be spending more than we bring in 100% and potentially for a couple of years. So do you have any suggestions on kind of how do I ensure that that message getting out to donors, if they do ask for our budget and they look at our budget, that we can explain, you know, we prepared for this. This is a short-term thing, but we do have to do it. At some point, we have to keep moving on the work on our building in order to meet our contract for having the physical space that we have. So I worry about a donor coming in and seeing that and being like, well, you're not managing your budget well. And it's like, well, but we actually are, because we have to do this and we raise the money to do this. But it won't look great on paper for a little while.
Yeah, well, and I'm yet another one of the nonprofit boards that I've worked with has that issue. We've got a building that has about $1.5 million worth of work that's needed. So we've started to fundraise to be able to do that work. It's critical. But the first thing we did, and my first piece of advice would be, go back to tying the facility to your mission. So is the facility critical to doing what you do in your mission as a nonprofit? I'm guessing that it is, or you wouldn't have it. So the first thing I think to do is to be able to send the message to tie the mission of the organization to why the facility is critical and necessary to accomplish that mission. Then once you get past that relationship, we start to talk about what you just said, which is the critical things that have to be done to the building to keep it viable over time. And that was known when you originally got into the building, and that's okay. I think people will understand that scenario as long as they believe that having the overhead of a building is critical to your mission as a nonprofit. Does that make sense?
I have a question. So in a case like that, would it be appropriate to have a separate capital budget, like just for that situation, to be able to explain over a multi-year period of time what's happening?
Yes, absolutely. So I would lay out that picture so that it's very clear to folks that this is a multi-year issue and project. It's capital, not operating funds, which again, just to explain to everybody, just means the funds are going into an asset like a building that might last 30 years. They're not funds going to just fund your payroll or your expenses this year. So you've got a long-lived asset, and that asset has value. So if you're sitting on the board or you're giving a grant to that organization, you're saying, well, they've got a strong asset sitting there in a facility that will keep them viable. And there's all kinds of things you can do with a physical asset like a building. You could sell it. You can take a second mortgage out on it. You could take an original mortgage out on it to fund operate. You could do all kinds of things, or more importantly, just use it for what your mission is. So yes, I would do a multi-year capital budget to show how that's going to work and why it's important to your organization. Yeah, those are great questions.
I've got another one. So
Yeah.
when we enroll children in our program, we incur out-year commitments because they can stay in until age 5. So if you just looked at the surface, you'd say, we've got a boatload of money. Well, no, we have money for this year and we're good for next year, but we need to be still fundraising because each year as we enroll more children, we have more out-year commitments. Now I've done a projection as to when it will stabilize, which it will. But any advice about how we convey that?
Yeah, so you've got to paint that picture. And if it was accrual or regular accounting like companies do, that would be called a prepaid revenue. And so you would, if you got the revenue for a child for, let's just say 3 years,
Yes.
and we're in year 1, you would have to record as revenue 1 year, but then the other 2 years would be called prepaid revenue, and you would only recognize it as revenue in year 2 and year 3 for the pieces that applied to that. but most nonprofits aren't going to do all that accounting mumbo jumbo. So what you would do is lay that out as restricted or designated funds. So you've gotten cash in, but 2 years of those 3 years is restricted for that one child and to be done in those years. So I would show in your cash balance that you have funds that are restricted for future years, effectively for tuition or whatever you would call it. So when you're looking at your cash balance side of things, make sure you portray that as being something that's not available to just go spend now, because it has to fund expenses in year 2 and year 3 as well.
Thank you.
David, with about 5 minutes left
Yeah.
to 10, what I'm thinking, if it works for you, we could go through the rest of the presentation and go over time. I want to be mindful of
fine.
time. And those who, there's such a rich discussion. We appreciate all the questions. So what we're gonna do is we'll go over time a little bit. And those of you who can stay on the call, please stay on the call. If you need to hop off for your next meeting, please do that. We'll send out the recording. Okay, everyone? All right.
And we've covered the key information. So the example I've got here, and most people who know me would know who this is anyway, but it's a Christian Service mission in Giles. It has a retail thrift store. I did the budget myself, and prior to this year, even though this is a decent sized organization now, there was just an annual budget. There was no monthly breakdown. So I'm going to go forward to this crazy looking spreadsheet here, and just show you that the first year I inherited this, it was an annual estimate for each of these categories, revenue and expense, divided it by 12 to get to a monthly amount. And that's how we did it. I did it differently this time, based upon the fact that I had a year experience and understood what was going on a little bit better. And you can see that on the left, we have the income categories, then the expense categories. On the right, it adds up to a total budget for the year and compares to the prior year and the year before that. So we can see, and I highlighted in pink the areas where there was substantial change between the years that the board needed to be aware of, how we got to the numbers that we did. And so you'll see this organization runs a thrift store, so they have sales. So we estimated sales in the basis. That's the second line down on the left. Churches, we get donation from churches is the first line. The sales, cash and credit. Yeah, if you have credit card sales, you have to pay a fee to the credit card company. So that's why those are separated out. And we did an estimate of the amount of sales per day based upon history. So this was more history-based budgeting. And the number of retail days that we would be open, we know that as well during each month by looking at the calendar. So that's how that got there. And you can see when you get down to a line like donations, that's an estimate based upon history again as well, with round numbers, because you never know exactly what's going to come in $100 and $200 donations, but you estimate that a little bit based on history as well. And you'll see we even have sales tax as well, got to remit to the state government because we are selling some retail. And then you come down wages, of course, you see the first line under expense is by far the biggest line. And that's because, again, we're running a thrift store and you have to have employees to sort everything that comes in that's donated, clothing, glassware, housewares, other items. And then you have to have folks to work the retail floor and run the cash register and so forth. But we also have folks who handle emergency assistance. So one of the things that all the sales in the thrift store does is it covers trying to give emergency assistance for utility bills, so to some degree for food and other items out of this organization. That's really where the mission is. So you'll see that emergency assistance, that's way down on the list, but probably about 2/3 of the way down the expense line on the left. It varies by month as well. It's heavier during the winter months when people have heating bills that they can't pay and they have severe difficulty there. So I don't want to highlight too many things here. Thanks for highlighting that. But that's really the kind of thing you have to do. You'll see some of those fixed cost property taxes, that type of thing, which are going to be there no matter what we do. As I said, there was a mortgage on the building, that would have been a fixed expense, but that got paid off about a year and a half ago. So this is an organization too, where with an old building, where if we run a surplus, that's okay, because, for example, we've got a large front picture window, but it needs to be replaced. It's old glass, and below it is a structure that's almost rotted. So we're going to have to spend a significant amount of money just trying to get that up to speed to the question of the capital amounts earlier. I'll go back now, but I wanted to just show you what the spreadsheet looked like. So on revenue, sales are based on those retail days we talked about, contributions on history, and we do make some contacts to folks to make sure that they still love us and they're still going to donate year after year. We also look carefully. I just did this schedule for the auditors at contributions by individuals for the whole year. Sometimes if somebody contributes 5,000 or more to an organization, you have to report that separately on your 990 tax form. So for any of you larger organizations, that's something you might need to flag, but it also gives you a great feel for understanding who's doing, or 10 donors doing 90% of your donations, or is it spread out a lot more than that? And then grants, as I said, are based on discussions with grantors. For example, Carillion has given this organization money to fund the food pantry in substantial amounts, so we could buy fresh produce and not just to give out canned items. And then, of course, board members, we try to have each of our board members be people who can go in and act to try to use their contacts to get funding sources, whether it's grants or individual donations, civic clubs that they're in. All of those become critical to what we do in this organization, the budget. And the expenses, you can see payrolls based on historical hours times wage rates, and one person is salaried employee, so that's the director. Benefits are based on history, and we do have an employment agreement with the director, so any of her benefits end up being pretty easy to calculate. And other insurance costs, and and one thing, if any of you have facilities, you probably know already, is that insurance costs have gone up. If you've got your own car and car insurance, that's been happening. There were several organizations, our church was this way, where we had a 20% increase in projected premium cost on property insurance and liability. And at the same time, they excluded things they didn't exclude before from the coverage, and raised deductibles to 2 to 3 times what they were before. So insurance is a very difficult area right now in terms of what you have to pay, and bidding that around, if you have that situation, it's very important. So everything else, as you can see, based on history and work with third-party firms. But we didn't have much time, so I don't want to go through a huge amount of detail, but give you a flavor for what the budget looked like. This organization has grown substantially, mostly because we opened more hours with the retail sales and invested in that, and it turned out to work very well to supply the funds. Now, when we talk about budgeting and a deficit, we budget a deficit in the food pantry, which is a separate schedule, a separate fund. And we do that because the food pantry is part of the critical mission of the organization. So if we use funds we raise from the thrift store to help feed people, that's a critical part of what we do in this organization. So that's probably enough out of me, Lindsay. Let's see if there are any more questions. We're almost to time here anyway.
Yeah, and I could jump in with a couple of questions that came in when you all register that I think folks will find helpful. So I think one big issue, particularly when you're running a nonprofit, is that inconsistent income. Maybe you're waiting on a grant and it could be months until you hear, or you project you're gonna raise a certain amount of money, but then donations are down. And how would you approach planning for that kind of scenario?
Well, the contingency planning we just discussed earlier is part of that, and part of that contingency planning is maybe not just a reserve for expenses you don't know about. It may be a contingency plan on, can I cut expenses if I have to, if that revenue doesn't show up? Of course, companies and large organizations do that all the time. They're always looking to understand if I have a fundamental change in my revenue source, can I cut my expenses to deal with it? And then, of course, if you're lucky enough to be in that position to have a contingency fund, to have actual cash on hand to cover those situations, is helpful. But if you don't, then it's good to have a contingency plan of where you can cut expenses if you have to.
Yeah, that makes sense. And Marilyn just put in the chat, actually, this was gonna be the next thing I asked, so we're on the same page here, Marilyn. A few folks asked for recommendations on software or budget templates, and I know some, free is ideal. But if you have any suggestions for what you might suggest people use.
I think what you find by far the most is people just use Excel. They use spreadsheets for this because it's not terribly complex. If you have QuickBooks and you use that to track your actual activities, there's a good place in QuickBooks to do the budgeting, and then you can do the budget versus actual reports automatically. That there, as you know, from the Community Foundation, Lindsay, there's all kinds of nonprofit software that's out there to use too. But for most organizations that aren't too big, I think just tracking in spreadsheets is the way to go. And there are a bunch of Excel classes out there if people aren't familiar that they can take that are relatively cheap to do too.
And there's some votes for QuickBooks in the chat
There
here.
you go.
And Henry asked, an income statement doesn't show contingency funds already on hand. Would I just put that in the notes?
Yes. Yeah, that's the right thing to do. Yeah, so what you could have is a line in your budget for contingent expenses. And if you have something that comes up that was not budgeted, you could put it on that line for the actual as well. So let's say you had a big maintenance expense for a piece of equipment. You had a food pantry and you had a refrigerator go down and it cost you $1,500 to fix it. And you had a contingency fund for the year 2000. Well, I just showed that on the same line in actual or $1,500 for the contingent expenses to fix the refrigerator against the 2000 total contingency that I budgeted.
Lindsay?
Well, I think another question that comes to mind for me is, what are some common budgeting mistakes that you see? And if Jess and Laura are still on the call and you want to share any insight on common mistakes we see in grant application budgets, but I'll let David take the start off with the question.
Yeah, overestimating revenue. That's the first one I'd say. A lot of small organizations, it's just difficult, and you want all that to come in, but being conservative on the revenue side, especially before you develop a lot of history, is probably prudent to do until you do add that history and you really know your donor base and you know the sources of your income. But I think Jess could probably speak to that pretty well.
Yeah, Jess and Laura, if you want to jump in.
Yeah, I'll jump in and then toss it over to Laura. I mean, I think, so we see a few things. I mean, first, just as David so clearly put here, budgets have revenues and expenses. So, sometimes people will send us in their grant application just a list of their expenses or even like a printout from their checking account about things that have been spent. None of that is a budget, right? We want to see the planning process. The other thing I would say is that oftentimes in a budget, when you're using it just for your board, you and the board members may know what a particular line item refers to, but when you're sharing that over with a funder, we may not. So occasionally we'll see things that could look like red flags to us that aren't actually, but like, I'm trying to think of some of them, but fees,
bank
or
fees and
yeah,
things.
like debt, paying down bad debt or something like that, that's a line item on the budget that you guys know the background of, but we don't. And so sometimes as folks are looking at it, they're like, what is that exactly? Like, what should we be concerned about this particular line that might suggest something? So I would say just being thoughtful as you're naming things in the budget that you share with funders, being kind of clear about what those line items are. Laura, do you have anything to add there too?
Yeah, just one other thing. A lot of times they will list the community foundation grant they are applying for as if they had already gotten the revenue. And so when you're applying for a grant, it needs to be listed as pending.
And one thing I did here, Jess and Laura, is I just brought up my last slide, which for this organization that's in our example, this is not by any means all the notes, but it's some notes to explain what's going on with the organization as well as how it impacted the budget. And then, of course, there are separate notes out to the right with every single line item on how it got calculated as well. But something like this, might help the community foundation or other grantors to understand how you got to where you did and how the budget was prepared.
Yeah, I think it's very important to look at your budget from the lens of, if I'm completely new to this organization, would I understand what's listed here? So look for acronyms, spell out acronyms, and add in narrative as needed. And just being mindful of time, we have time for 2 more questions. It looks like Terry and Wendy might have questions. Terry, would you like to go ahead?
Oh, I was just gonna mention, I put in chat that we would actually, in my church with a small budget, we would put an expense item as transfer to capital reserve if we had the funds flush enough to send like a couple thousand each year to our capital reserve fund, just to kind of keep growing that. That was kind of a contingency thing, just to have some money in reserves from our operating income. If we were running in the red, in the black, we would try to build our capital reserves. So that was just a way to kind of move some money from our operating fund to a capital reserve fund for future contingency.
Good point, Terry. And that's an excellent thing to do if you can afford to do it.
Yeah. A lot of years it had a 0 on the actual, but it had a budget item of like 2,000 expenditure. Thank you.
Thanks, Terry. And Wendy, did you have a question or did it get answered? We can also take questions from your cat. They're always welcome. One more question, or actually I'll just pause to see if anyone else had something to ask.
Just a really quick question regarding grants that are pending. So timeline is really connected, I think project timeline connected to constructing project budgets and grants. I assume that most foundations want to see projects that have not yet happened, that they're not funding things that have already gone on. They're looking at future planning. And I ask that because, of course, with most nonprofits, you're already doing the work and you need the money right now. And that's what you really want to ask for. But what you should be asking for is sort of the future need. Would I be right in thinking that?
Well, it's Community Foundation. You might recall, if you've been with us for a while, that we used to take separate project grant applications and operating grant applications. And then during COVID, what happened was the strongest need from everybody was clearly operating grants. And so it seems like most of our constituents, have really wanted the operating grants. And so we went to only operating, which of course can fund whatever project you want to, instead of doing separate project and operating grants. So Jess, you want to comment on that too?
Yeah, I mean, you're correct from the Community Foundation's perspective. What you're applying for is just kind of unrestricted. It can be operations, programs, et cetera. But to your point, we don't fund things that have already happened, right? We don't fund like deficit spending or anything like that. And I would say that that's probably the case for most of the funders that you're gonna come into contact with is they're gonna want it to be for something that's either a program that's ongoing or a program that is coming in the future, as opposed to paying for something in the past, you know, because it's already happened. So again, you know, timing is kind of key there, and being aware, as it sounds like you are, and looking at different grants about when you will actually get the money in hand to know what it is that you want to spend it on, which is why in our case, when it's unrestricted, you know, you just put it wherever you need it at the time you get that money in November. But you don't want to put in your application to us, okay, well, this is to fund the big event that I had back in May. It's like, that's not gonna, that's not something that's gonna rise to the top for at least our review committee.
Thank you.
Everyone, I know we could probably keep going with questions.
We can always do it again.
We could always do it again, and I'm already thinking about what kind of follow-up session we could have maybe later this year. So we know this is a big need with folks, and we could probably all use help improving our budgets. So we just really appreciate David taking the time and sharing his expertise. And thank you all for all the questions. We really appreciate it. I'll put in a plug for the Community Foundation grant. I think probably most of you on the call are aware of this grant, but if you're not, the application is open right now, and we have 2 grants right now. One is our traditional responsive grant program. That's the one that Jess was just talking about, which provides up to $4,000 in operating support. And then we have a new grant this year, that's an education grant, and that's awards grants to public school systems. The application for both of these grants is due on Friday, July 9th at 5 p.m. You can find the information on our website at cfnrv.org/grants. We would love to receive an application from you all, and we also love questions ahead of time. So if you're not sure what we're looking for, or if you submitted something right, ask us ahead of time. We want to help you. Just don't wait until the week of or the day of that the grants due. We won't be able to help you at that point, but please reach out anytime with questions about our grants, and we would love to see an application from your organization.
Hey,
So,
hey, Lindsay,
yeah.
I'm sorry. It sounded to me when it came through, I might have it cut off for me, but it sounded for a second like it said July 9th is the deadline, and the deadline is July 19th, 5 p.m. on July 19th. So just wanted to make sure that was clear to everybody. I'm sorry about that.
Thanks, Jess. Yeah, my internet likes to be a little unstable, so the 19th. But if you wanted to get it in early, we love early applications. All right, everyone. Thank you again for sharing time.